Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by LifeGem. Hi, I'm Shaz. I'm your moderator today. So today's topic is mastering support and resistance. So before we begin our webinar, please let me read a disclaimer before I start the webinar. All right. Whatever information in this webinar is for general information purpose only and is provided on an basis without any representation or warranties on any kind. So all example and view expressed are entirely the presenter own. Bursa Malaysia and also the presenter do not accept any liability. And also for any investment or trading decisions made on the basis of these informations. All right, let's we get to know our speaker today is Mr. Jerry Lee. Mr. Jerry Lee is currently a fund manager in one of the Asia's largest listed wealth management institutions. So his asset management portfolio is over 9 digits and he has more than 10 years of trading experience and has been trading on Malaysia and also US stock commodity and also indices futures for a number of years. So he practiced technical analysis for a majority of his investment in the past 10 years. And he has more than 3 years of experience in teaching of technical analysis. On top of that, Jerry Lee is a CFA chartered holder. All right, please welcome Mr. Jerry Lee. Hi, Mr. Jerry.
Hello, hi, Charles. Can you hear me?
Yeah, I can hear you very clearly. So I'm going to pass this webinar to you, all right?
Okay, sure. Okay, before I start, let me first share my screen. Give me a moment. Charles, can I confirm with you whether we'll be able to see my screen?
Yeah, can hear your screen. I can see your screen clearly.
Okay, and thank you so much. Okay, so I think first of all, thank you everyone for joining our session today. I think for today's session, like I mentioned by Charles, it's actually organized by Bursa Malaysia together with LifeGem. First of all, thanks for inviting me for carrying out these sharing sessions on the topic of mastering support and resistance. So I think without further ado, right, I won't spend too much of time to talk about all the nonsense, right? We'll straight away go into the topic of today's sessions because I think there are a few parts that I'm going to cover for today. Before we go into about support and resistance, I think that's a very important thing for us to really know about technical analysis, the logic behind it, and also to build some understanding before we can really practice it. So yeah, a bit of a disclaimer here that I think Charles had mentioned just now. I will just skip through this part. We first come to the learning outcome. So I think if you look at for today's sessions, right, basically we wanted to achieve 3 things. After these sessions, hopefully you all will be able to know what is support and resistance. I think this is something very important, especially if you are using technical analysis in your trading plan. And it's very important for you to have a trading plan because when you want to invest, when you want to trade, right, if you don't have a plan, we used to say that if you don't plan it properly, right, if you fail to plan it, you actually plan to fail your investment. So it's very important for us to have a proper plan before we can start to execute any investment decision. So beside the first one, what is support and resistance? I think throughout the session, I will actually explain about it. Second thing, I will actually share with you guys on how to identify support and resistance. I think there are a few ways for us to really identify support and resistance. You can use the previous high or the previous low as a support and resistance. You can use trend line. There are many ways for us to identify it. Later on, I will share with you a few ways, and also I will share with you which are the ways that personally I do practice it for my own investment. And I think the third thing is actually how to incorporate support and resistance in your trading plan, in your investment. And most importantly is actually there are actually a few tips that you all need to take note when you identify a support and resistance, and whenever you start to practice, start to execute it, right? There are a few things you have to be very careful, because you always say, when we buy a stock, once we bought it, it dropped. And whenever we decided to sell it, right, it will actually start to rebound again, rally again. So what are the logic behind? Because I guess some of you would probably have experienced that. And I also experienced that in the early days of my trading journey. So those are important things that we need to take note. And I think once you all mastered it, right, you won't be able to feel that whenever I buy it, you start dropping. Whenever I sell, it start going up again. Yeah. So without further ado, let's start with the first thing that I'm going to share with you guys, which is what is technical analysis. Because I think at the back of support and demand, the support and also resistance, right, is actually relating to technical analysis. So first of all, we need to know what is technical analysis. And if you look at it by definitions, right, it actually means that technical analysis is a study of a market action. So what do I mean by market action here is actually consists of two things. If you know about technical analysis, look at the chart itself, right? It consists of two things. First thing is actually the candle itself. The candle itself, it tells you the historical price. And the second thing is actually the volume. If you look at below the candle, right, you will see all those bar there. So the bar is actually telling you the transaction volume of the particular day. So it's very important, if you look at technical analysis and if you look at a chart that you just look at it, it just show you all the historical bar, it means that, or it just show you all the historical candle, right? It means that it tells you nothing, because you can't just analyze, you can't just look into a chart that show you historical price. It's very important for us to look at the combination of price and volume. Without volume, the candle itself is nothing. It can't tell you any message. It can't tell you any information. So it's very important to bear in mind one thing. Whenever you look at chart, whenever you analyze, look at technical analysis, right, you need to look at both price and volume side by side. These two things have to come together in order for you to practice technical analysis. Okay, so without these two things, you are basically just looking at a price chart, but you can't get any information from it. So that's number one thing you need to remember. And when we talk about technical analysis, it's actually back to the very, very original economic theory of law of demand and supply. Because if we talk about stock markets, we talk about any financial products, right? It's actually related to demand and supply. And the chart itself, the chart that we are looking at, the candle itself, or the bar, the volume bar itself, they're actually telling us demand and supply. So when there's more demand, when there's more buyer, of course, the price will go up. And when there's more supply, when there's more sellers selling the stock, the price will go down. So if you look at it, the basic of it, right, it's as easy as more buyers, price go up, more seller, price go down. So this is the basic thing that we need to remember. But when you practice it, bear this in mind. And we also need to remember the three assumptions of technical analysis. I think this is something also very important. First thing, market action discount everything. What do I mean by market action discount everything? It means that the price of the company will actually reflect all the information that's available publicly. So I think a lot of you will face the problem that, hey, today I look at this news, and I think, or probably like, for example, Genting announced some significant news. They are going to have more teams in their theme park and so on, which expected to attract more tourists and so on. So if you look at the news and you decide, hey, it seems like the prospect for Genting is good, let's buy the stock. Try to ask yourself, how many of you ever experienced that? Look at news and buy a company. And wherever you all did this, right, how many times of you buying a stock because of news, because of the articles that you are reading on newspaper or on social media, and subsequently you lose most of your money. Yeah. So I think this is something very important, that don't just look at a news and decide to buy a stock, because remember, the first thing of technical analysis, the first assumption that tells you market action discount everything, meaning to say that the price would have already reflected what is available publicly, what is available in the news, what is available in your articles and so on. Those are the things that have been reflected in the share prices. So this is something very important for everyone to remember. Most especially if you look at the markets that we are in, even those that is not publicly available, those information, sometimes you look at share prices will move just without any reason. Then 2 weeks later, you realize that, oh, this company is going to issue bonus issue or earnings is going to go up by 3-fold, 4-fold. So, if you look at in the local market, in such a markets, right, that market is so inefficient, don't buy any company just purely because of market news or just because of those news that you have been reading on the newspaper. Yeah. Second thing is that price move in trends. I think this is also one part that I'm going to cover later on. I'm going to share with you on trend analysis, how to identify trend, because by knowing how to draw a trend line, it helps you to identify the support and resistance point. So later on, I will also cover this part, prices that move in trends. And the third part is history repeat itself. I think that is a gist of technical analysis. Because why we look at the historical prices, why you look at the historical volume, because we all assume that moving forward prices will actually, history will actually repeat itself. Whenever this thing happen, subsequently what we can expect. So these are the three basic assumptions of technical analysis. Bear in mind, guys. First thing, market action, discount everything. Don't buy based on all the news that you have been seeing on the newspaper, because those are the things that have been reflected in the share prices. Second thing, it's very important to know the trend of a stock. Prices always move in trend. You will be able to spot a trend in any stock that you are buying, whether it's an uptrend, downtrend, or whether it's on the sideline. So definitely there will be a trend that you can identify. And the third thing is history will repeat itself. So after knowing what is technical analysis, just a basic one about a little bit of a candle, in case there are someone new to technical analysis, just to share a little bit, what is a candle and how a candle looks like. If you look at the left and the right, we have two colors candles here. We have the green color one and also the red color one. So usually you will see two set of candles, either is in green or gray, or it will actually in black and white. Okay, so usually it will be green and red, or it will be black and white. So green color means, what means by green color? It means that on that day itself, the price actually move higher from the opening price. So if you look at on your left hand side, the green color, right? The line here, the lower body. If you look at this candle itself, this rectangle, the lower line here is actually the lower body. The upper line here is actually the upper body line. Then you have the upper shadow, you have the lower shadow. So just some simple definition. If you look at the lower body line here, is actually the opening price. And the upper body line here is the closing price for a green color bar. For a red color bar, is actually the opposite. Opening at the top, closing at the bottom. So it means that the price moves lower from the opening price for a red color bar. But for a green color bar, it means that the price moves higher from the opening price. So that's why the closing price is higher than the opening price. Then you have the upper shadow, you have the lower shadow. It means that on that particular day, if you are looking at daily candlestick, on the particular day, the price actually moves as high as this point. And on the particular day, at a certain point, the price actually moves as low as this point. So it's the same for the red color. This is the highest point on that day, and this is the lowest point on that day. So this is how we actually usually read the candle. Green color means it go up. Red color means on that day it went down. So this is something very important to bear in mind. It's either green or red. Oppositely, it will be white and also black. So white color equivalent to green color, and black color equivalent to red color. So those are the things to bear in mind for some of you who are first time knowing about technical analysis. So the next part, we will move on to the key topic of today, support and resistance. What is support and resistance? Okay, by the definition itself, support is actually an area that the buying interest is significantly stronger than the selling pressure. So if you're still be able to recall, right, at the earlier of this session, I did mention that basis is actually related to the very minimal basis of supply and demand. So if you look at the basis of supply and demand, and if you apply here and look at the support point is actually mean that this is an area that you have a much stronger buying pressure. Buying interest is much significant at this point in time, meaning to say that there's more and more buyer coming in when you hit this price. For example, let me give you an example. If today, if we say that A-Asia is trading at 60 cents, when you know that 50 cents is very, very attractive, and you will actually throw all your money to buy when it is at 50 cents, there will be more people queuing there, and you will put most of your queue over at the 50 cent level. So you can actually say that 50 cent level is actually a very strong support point. But in chart, later I will share with you guys how to actually identify this point. What I mentioned to you guys on 50 cent and 60 cent is actually on the psychological perspective, or on a valuation perspective. If you did all your valuation and think that A-Asia worth actually more than 50 cent. So whenever it hit below 50 cent, it is a very good buy. Then you will actually put most of your queue at 50 cents. So that is a point of a supply. So support point on by theory, is actually means that it is a point where the buying interest is more significant than selling pressure, meaning to say that there will be more buyer than seller. So whenever you look at support point, right, whenever you hit this support point, the share price is expected to rebound. Point where people will actually start buying. Whenever you hit here, people will actually start coming in to buy. So this is a point where the price, when it touches here, it will actually start to rebound. And oppositely, what do we mean by resistance? Resistance is actually opposite of a support. Resistance is an area where you see selling pressure is so much significant than your buying interest, meaning to say that there's more supply than demand. When everyone wants to sell their stock, when anyone want to throw whatever that they are owning, that's why share price will start going down. So that's why if you look at it, whenever the share price touches the resistance point or the resistance area, share price will actually start to decline. This is because this is an area people will think that, the price of the share is actually overpriced. It's too expensive. Let's sell the stock. On the fundamental perspective, you could think so. And on the technical perspective, I'll share with you how to actually identify this support and resistance point. But just remember, just bear in mind, right? Whenever you look at support point, right? Whenever the price touches the support point, the share price will be expected to rebound, right? And whenever the share price touches the resistance point, the share price will actually be expected to decline, to drop further. Okay, so this is a definition of support and resistance. So now, why is it so important of knowing this support and resistance? Because three things. First thing, it helps you to identify when should I buy and when should I sell. Now later I will share with you how to actually execute with support and resistance. But knowing support and resistance is very important because it helps you to identify your buying and your selling point. When should I buy? If you always buy, if you don't refer to technical analysis, you don't refer to charting, you just look at this company, Maybank is a good company, today I have money, let's buy. So if you don't look at technical chart and you buy exactly at the resistance point, and you always complain why whenever I buy a stock, the share price will start dropping. The reason is because maybe you are always buying at the resistance point. That's why whenever you bought into the stock will start to decline. So it's very important for us to identify the buying and selling point, because without knowing the buying and selling point, you will actually lose your money at the beginning point. And you need to take a longer time for you to break even and for you to subsequently make money. So it's very important for us to really look into support and resistance to identify our buying and selling point. And the second thing, it helps you to determine when should I take profit, when should I cut loss. And this is exactly as after, because we know every investors, especially for a lot of the new investors, right? I think the common mistake that they, or not to say common mistake, a common problem that they have is that they know when to buy, but they don't know when to sell. The meaning to say that they know when I should enter into the stock, or even they don't even care. Sometimes they don't even care when is a good time to enter. But they sort of know, no, oh, I want to buy Maybank, but let's buy Maybank. But the next point, the next questions to ask yourself is that after buying this Maybank, when should I sell? When should I take profit? Or when the price start dropping, when should I cut loss? So which is the point that I should cut loss to avoid further losses? And which is a point that I should take profit in order for me to protect my profit? So knowing the support and resistance, it helps you to identify at which point you should really start considering cut loss, because it had dropped below the support point. And if we continue to drop further, probably it will drop another 30–40%. So I should actually sell my stock at this point in time to enter later on, instead of holding it until I see a 30–40% of my losses. So that's second important point of knowing support and resistance. And the third thing is a better risk management strategy. I think it's very important, especially for some of you who want to practice technical analysis. You want to use technical analysis as your trading plan. So if you are just looking from technical perspective without really studying the company fundamentals, study the management, the profitability of the company, if you just trade based on technical analysis, as for myself, I'm actually a trader. 40–50% of my portfolio is actually purely based on trading without knowing some of this company. And the other 50% is based on investment. So for the 50% of my portfolio that I purely trade, right, I just use technical analysis to trade, right? It's very important for us to have a risk management strategy, to tell myself that at which point I should really consider cut loss, at which point that I should really consider take profit. Because without a proper risk management strategy, your trading plan is memang that you will actually fail. Because in trading, the number one important thing is never about how smart you are, or it's never about how knowledgeable you are. In trading, the number one rule is you must have a risk management strategy. You must have risk management plan. Without risk management plan, without risk control, you plan to fail your whole trading journey. So it's very important. So these are three things that why we want to know support and resistance. I think later on, right now I'm just showing you and telling you guys more on the theory side, right? Later on, we will go into some of the case study. And I think at the end, I will also be sharing you with some stock, right? Showing you with the trend line, everything, how do we identify using a real example. Yeah. So the next thing to share with you guys, a few things, how to identify support and resistance. So for usually, I mean, there are more ways than these 4 ways, to draw a trend line, to use a previous high, previous low as a support and resistance, and then moving average, and also Fibonacci retracement. There are more ways to identify support and resistance, but this is a 4 common way of us identifying support and resistance. Okay, later on, I will actually share with you guys more using a stock example by using the moving average and Fibonacci retracement. But I will actually go with the first one because I'm going to share a little bit more on trend. So the first one is actually on drawing a trend line. So by drawing a trend line, you'll be able to know where is the support and resistance. So next part, I'm going to share a little bit more on trend analysis and what is a trend. All right. So if you look at what is a trend, right? Trend is actually the direction of a markets. When the stock prices is moving up, we call it an uptrend. When the stock price is actually moving down, we call it a downtrend. And when it's moving no way, it doesn't look like an uptrend, doesn't look like a downtrend, but it's just moving sideways. We call it a sideways. So this is the three direction of a stock. It's either moving up, moving down, or moving sideways. That's why I say you will definitely be able to identify the trend of a stock. Definitely there will be a trend because it's either uptrend, downtrend, or it's on a sideways. And in order for you to analyze a trend, right, it's very important to know that the trend of this stock market, is it in a primary trend, or is it on a secondary trend, or is it on a minor trend? So this is something very important because okay, just look at the definition itself first. Primary trend is something that is 1 year or longer, meaning to say that it is a primary trend of this stock. For example, if I share with you, if you look at most of the technology stock, the local semicon stock, they're actually on an uptrend, but it's not on a short-term uptrend. It's not on a secondary or minor uptrend. They're actually on a primary uptrend, meaning to say that if you look at the chart on the 1.5 year to 2 year basis, right, the chart is actually moving up on an uptrend. So this is a primary, we call it a primary uptrend. But on a primary uptrend itself, you will have a lot of a secondary and minor trend, meaning to say that on an uptrend, on a long uptrend itself, you will be able to spot some downtrend, then another uptrend, and another downtrend. So those are considered secondary and minor trend. So secondary and minor trend, secondary will be something ranging between 1 month to a quarter, 1 month to 3 months. That's we call secondary trend. And minor trend is usually less than a month. It lasts for a few weeks. Maybe there are some pullbacks. So those are what we consider a minor trend. So those are the three duration of the trend that we need to be able to spot it. Because what is really important here is because if you look at a chart or a stock itself, if the share price broke down or break down from the long-term trend, from the primary trend, it means a very, very serious signal. Yeah. So those are important things that later I will share with you more on this part. And the strength of trend, right, it actually depends on 3 things. How powerful the trend can last, or how strong that this support, or we call it the support or resistance is, it depending on 3 things. First thing is the number of touches. Because if you draw a trend line and there are more touches, it means that the trend line is so much stronger. And then the angle of the trend line, right? If the angle of the trend line is much steeper, right, it will be a big wick, a fractal trend line, it will be much stronger than a steeper trend line. So those are this is the second thing. And the third thing is the length of the trend line. If the trend line move from, for example, you can connect it not just about a 3 months period. You can connect it using a 1 year or 1.5 years of a chart, right? It means that this is a primary trend. And a primary trend is so much stronger than a secondary trend. So these are the 3 things for you to identify to know the strength of a trend. So remember 3 things. First one is the number of touches. More touches, the trend line will be much stronger. Second thing, the angle of the trend line, if it is much flatter, meaning to say that the trend line will be much stronger. And the length of the trend line, the longer, the better it is. And then we move on to this, right? Uptrend. So how to identify an uptrend? Uptrend basically means you see higher high and you see higher low. L is low, H is high. So you see the subsequent higher point, right, is actually higher than the previous higher point. That's what we call higher high. And the subsequent lower point is actually higher than the previous lower point. That's we call higher low. So on an uptrend, we have higher high, we have higher low. So what is the action? What should we do on an uptrend? On an uptrend, you don't buy at the peak. You don't buy when the price is actually recording a historical high. You only buy whenever there is a pullback. Okay, so remember one thing, action for uptrend is that you buy when there is a pullback. Okay, and you take profit or you sell if it breaks upward the trend line. Okay, so that's something very important. So this is a thing that you need to bear in mind. And on a downtrend means there's lower high and also lower low, meaning to say that the price continue to make lower high. When the subsequent high it much lower than the previous high, and the subsequent low is much lower than the previous low. So this is what we call a downtrend. So what is the trading strategy during a downtrend? So during a downtrend stock, you sell during every rebound. Okay, remember, for a downtrend stock, you sell during every rebound. You don't sell whenever it registered or it recorded a new low point. You sell whenever the stock will rebound, because bear in mind one thing, prices will not continue to move higher on a straight line, nor it won't continue to go lower on a straight line. Definitely there will be some range bound, there will be some rebound and so on. So that's why for downtrend, buy sell whenever there is a rebound, and buy if the downward trend line being break, meaning to say that it break higher, the price break higher than the downward trend line. That's the point that you want to buy. And for sideways, it means that there's no direction. You can't really see whether it's going up or down. That's what we call a sideways. For sideways, you buy on support, you buy on the green color line. If you look at the chart on your left hand side, right, for action to take during a sideways trend, you buy on the green color line and you sell on the red color line. So this is how we actually execute on a sideways trend. Okay, so I think move on to next, right? We use a few chart to identify. So if you look at this chart, right, our I properties. So this is how we actually draw a trend line. You know, this is a very obvious. If you look at it on a past 1.5 year basis, right? This is actually a downtrend stock. Well, this stock is actually moving down. Why? How do I identify that? No, this is a downtrend stock. Because if you look at it, right, let me draw some point here. If you look at it, right, this is a point where, let me see if I can draw something here. Okay, so if you look at it, over here, you see a high point. Subsequently, you see lower high, much lower high. Yeah. And then you have lower low. Yeah. So this is what we call a downtrend stock. So during a downtrend stock, how do we actually draw a trend line? What you need to do is actually to just connect most of the high point, and you will be able to draw a downtrend line. So this is how we actually draw a downtrend line, connect most of the points. So you will be able to connect 1, 2, 3, 4. So in total, there are 4 points for you to connect, to draw a downtrend line. So that's why this line itself, right, is already help you to identify the resistance point. So if let's imagine, right, let me erase everything. Okay, yeah. Let's imagine one thing. Today, if you look at this RI properties, and let's say that you decided to enter, somewhere in 2021 November, that time, you decided to buy at here, without drawing this trend line, right, you wouldn't be able to know that this is a resistance point. You probably just look at this stock or RI property, oh, it seems like a good stock to buy. Let's buy into the counters. If you buy into this stock, then it start dropping. So you won't be able to know, hey, what happened to the stock? Why it start dropping? The reason why it start dropping is because this is a downtrend line, and it touches the resistance point. And when it touches resistance point, there are many sellers here. When more and more people want to sell their stock, and you bought it at the time that people want to sell, definitely the price will come down. So it's very important for us to really, know how to draw a trend line and look at the trend of stock. From there, you'll be able to identify the support and resistance. So when you draw a trend line, right, whenever the price touches the point and drop, and you at that point, you will know that this is a resistance point. So for this stock, moving forward, if we continue to touch here, it will start to go down until one day it break out from this trend line. When it break out from this trend line, then this is actually a good buying point for you to enter. Yeah. Whenever it's still below this trend line, don't touch it. Don't touch the stock. Touch the stock whenever it break out from this downtrend line. Okay. Next, we move on to another stock, which is moving on an uptrend. Yeah, if you look at this stock, all the way from 2012 to 2022, the most recent one. So we got this stock itself, right? It's actually moving on an uptrend. There's one point. There's 2 points for you to match. And you look at it, every time it moves higher and higher, it moves higher and higher. It continues to register higher high. And every time when it pull back, you look at the drawdown, the point is actually much higher compared to the previous one. So this one will be able to know it as an uptrend stop. So for an uptrend stop, very important, whenever the point, the price come close to this trend line, it's actually a very good entry point. So whenever, if let's say going forward, if there's more volatility in the stock market, right, and the price came down to this point, and it start rebound, then you will know that this is a very good support point, and this is a very good entry point for you to enter into inari stock based on the support and resistance, based on the long-term trend line of this inari stock. So that's something very important for you to identify the support and resistance. You need to be able to identify the trend line of this stock. Later on, we go in further on this inari stock, right? We look at the shorter term trend line, and we look at some other ways we use moving average to identify support and resistance. I think we'll do it after the next few slides. I'll share screen using Chat Nexus to share with you guys. Yeah. Okay. Before we go into some of the example, right? Just something to share with you guys on how to trade using support and resistance. So how do we trade using support and resistance? What should we do whenever the price hits the support and resistance? So few things. First thing, bear in mind, you need to buy above the support and sell below support. So meaning to say that when the price start hitting the support level, right, don't buy first, because there is a chance that the price will hit and drop below the support. So whenever the price hit the support level, don't start execute at that point and start buying into it. You need to monitor and see whether or not the buyer can hold on to the selling pressure. If there are more and more buyers coming in to hold on to it and the price start to rebound at the support level, once it rebounded a bit, that's where you start buying. Don't buy immediately when the price hit the support point. So bear in mind, this is something very, very important. Don't buy immediately when the price hit the support point. You should buy when it hit the support point and it start rebounded from the support point. Okay, because there is another scenario that it could potentially happen, which is whenever it hit the support point and it start dropping below the support point. So when it start dropping below the support point, that's where you need to sell. So buy above the support point when it rebounded and sell when it break below the support point. So this is how we actually trade using support and resistance. So buy above support point, sell when it drop below the support point. Second thing, buy above the resistance, sell below the resistance. What do I mean by buy above resistance? Buy above resistance, it means that, I mentioned just now, if this stock, if it's going to break above the resistance, this is your buying point. So when it break above the resistance point, when it break out from the resistance point, that is your buying point. And your selling point is when the price hit the resistance and it start to retrace. Don't sell immediately when it hit the resistance point, because there is a chance that it can straight away break out. So you need to sell when it hit the resistance point and it start decline. It start to retrace. So that's the point that you need to sell. So this is some tips to remember. Though, because people will always, this is a support point, so I will immediately set my buy point at, for example, 50 cents. Don't buy immediately. You should buy when there is a sign that this support is still valid, because you need to wait and see whether the support is still valid or not. So whenever it rebounded, when it touches the support point, once it rebounded, there is a signal for you to buy. But when it continue to break below, right, then you need to consider selling your stock. Yeah. And the third thing, avoid bull and bear trap. Yeah. What do I mean by avoid bull and bear trap? Try to think about it, right? Today, if I'm the owner of company, let's say company ABC, if today I'm the owner of company ABC, let's see if I can draw something here. Yeah. Let's see. Sorry. Okay, let's say today I'm actually the company of I'm actually the owner of company this ABC. And I know that for example, the stock is actually moving this way. Okay. Let's say the stock is actually moving this way and it actually rebounded. Oh, it's actually quite ugly. Let's see if I can draw something nicer. All right. Okay. Let's say okay. This is my company, right? Okay. I'm the owner of this company. Okay. And this is a support point, right? Okay. It's a bit ugly, my drawing. Bear with me. Yeah. So let's say this is a support point. If I'm the owner of this company ABC, I own a lot of stock for this company. Do you think that I will let the stock to stop here and let it start rebound further? What do you all think? Do you think if I'm a or make yourself the owner? If today you are the owner of this company, you hold a lot of the stock. You know that this, for example, this is RM $1. Okay. Imagine that this is the $1 price level. If you are the owner of this company and you are a good traders, you are traders and you are also the owner of this company, and you know that this $1 level is actually a support level for your stock. Will you let the stock to actually stop exactly as $1 and then let it start rebounding? Just ask yourself to answer this question. Key in your answer in the chat room. Let me drink some water first, and while waiting for your answer, right? Yeah. If you are the owner of this stock, will you let the stock and will you start buying the stock at $1 to make sure that it don't fall below this $1 point? Will you buy it, or will you be selling and let it drop below? We've been seeing some answer. Some people is saying that no, so I can buy at a cheaper price later, only start rebound. Let the price drop further, buy, drop below, sell, buy, drop below, buy, sell. Yeah, I think there's a mixture of buy and sell, right? But imagine, I think there's one guy getting it right? Yeah, if I'm the owner of this company, right, I will actually sell it first. I will make sure that the price drop below this $1. Why? Because this is the critical support level. When it drop below this point, right, everyone will start selling. And when everyone starts selling, what happened? The share price will go lower and lower. And at that point, I will be able to buy back my stock at a much cheaper rate. So if I'm the owner, right, and I want to play this financial game, I will be playing this because I know that at the first place, I know that if my company is a good fundamental company, I think someone mentioned about this, Jane mentioned about this, better job if good fundamental. Yeah, if I know my company is a good fundamental company and I know the sentiment right now is very bad, so it come to a support level. As an owner and also a trader, right, I won't let it rebound at this point. I won't go and support the share price at this point. I will let it drop further and further first. Then only I start buying back. Yeah, because if I'm buying at all this support point, right, no point. Why I'm going to waste my capital to support for others? I might as well let it drop first. When it hit until a level where we think, oh, it's cheap enough, then only I start buying it. So it's very important for us to, whenever we set our support and resistance, right, you need to be able to know bull and bear trap. And this is exactly what we call it, bull and bear trap. Yeah. So what is bull and bear trap? Bull and bear trap means the price has a fake breakdown. It break down, then it start to rebound. But at this point, you will start to sell because it break below your support level. So usually when I set my support and resistance, I will actually add on a plus minus 5%. Okay, so this one actually depending on your risk tolerance. This percentage, it really depends on your risk tolerance, how much risk that you can tolerate. Usually, I will actually set it between the range of plus minus 5%, meaning to say that when the stock rebounded, when the stock break down more than 5%, then only I consider sell. For example, if I am setting my support at $1, right? I won't sell exactly at $1. I will let it break below 95 cents, then only I consider sell. So there's a plus minus 5% that I will set for myself wherever I put the support and resistance. Yeah. So this is something very important because bear in mind, everyone is looking at the same chart. You look at the same chart as the owner also looking at the same chart. Other traders also looking at the same chart. So you will set your support at $1. Everyone will also set their support at $1. There will be someone that will short sell the stock to make sure that it will drop below the support first. Then only they can collect at the lower price. So those are things that you need to bear in mind. Bull and bear trap is something that you need to bear in mind. So I think just now I go through around the first and second one on how to identify support and resistance. There are two things that I haven't go through, which is moving average and also Fibonacci retracement. I will go through that using using my chart. Give me a moment. I'll stop sharing this first. I will be sharing my chart. Okay, can you guys see my chart here? This time we are talking about Inari, right? Inari. Let me know if you can see my chart. Okay, saw someone posted. Yes. All right. Okay. So just now we talked about Inari, right? Yeah. So just now we talked about using a trend line to draw Inari. So if you look at a very long-term perspective, right, Inari is actually on uptrend stock, right? On a very, very long-term perspective, Inari is actually an uptrend stock. But if you look at short-term, if you want to go into short-term, on a short-term basis, Inari is actually a downtrend stock. Medium term, the intermediaries term, it's actually an uptrend, another downtrend. So it's a minor downtrend, secondary uptrend, and the primary is also an uptrend. So it's a primary uptrend, secondary uptrend, and a minor downtrend stock. So to go into Inari, just like I mentioned, trend line is one thing, previous high and low is one thing. The third thing is moving average. So the moving average that I'm using for my own self, that I'm using for trading, I'm actually using EMA. EMA stands for exponential moving average. Okay. It will be more, okay, to explain it in a simple term, it means that it's more sensitive to the recent change of share prices. So that's why, because I want to alert myself for the recent change in share prices, so I actually using EMA. EMA is more sensitive compared to moving average, a simple moving average in terms of the recent change of price, because moving average, they are equally weighted, but EMA, they give a higher weight to the recent prices. So that's why the recent change in prices will have a higher impact to the EMA line, to the moving average line. So that's why I'm using EMA. And the two line that I'm using is actually 25 and 50. Okay. So don't ask me why. Okay, the reason because I'm trading for my own trading, right? It's more on 2 weeks to a month periods. So if you look at 2 weeks to a month periods, EMA 25 basically is one. If you look at 25 days, 25 working days is basically 5 trading weeks. 5 trading weeks is still 1 month plus. So my trading plan is basically more to 2 weeks to a month plus kind of a period. So more suitable for my trading horizon, right, is actually 25 to 50. But if let's say today you are buying a stock for a very long term one, then you don't need to look at 25, 50. Or you are trading a stock on an intraday basis, you are trading a stock on a contra basis 2-3 days, then you use 25 and 50, a bit too slow. Okay, it actually depends on your, that one I think we have, next time we will have other session to talk about moving average, how to set the line. But basically, just to share with you, for my own trading, I use 25 and 50. So if I use 25 and 50, right? How do I just like I mentioned about moving average is a good tools for us to I think let me see whether you all can see it clearly. Maybe let me remove some give me a moment. I remove some indicators first so that you all can see the chart clearly. Okay, so this RSI. Okay. So just like I mentioned, right? Moving average is actually another good tools for us to identify the support and resistance. Because when the stock is actually on an uptrend, right? You look at it, whenever the stock price hit moving average, it will actually start to rebound. You see, whenever it hit moving average, it will start to rebound. Until it break the trend. So here, okay, if it break below, then it start to stand above, it start to rebound. So over here, probably you need to sell already. Okay. Over here, whenever the trend change, when the stock is on a downtrend, right? You look at it, whenever the price hit the moving average, it start becoming the resistance. All right. It start becoming resistant. Yeah. So first thing first, whenever you use moving average, you need to know the trend. Sorry, I just recovered from COVID. Sorry, give me a moment. Okay, so I think for us to use moving average to identify support and resistance, first thing you need to know first thing you need to know the trend. So if it's on an uptrend, the moving average line, it can be used as a support point. Okay, so whenever it hit the moving average, you start buying. Let's see, if I start buying here, I make a profit here. If I start buying here, I make a profit here. If I start buying here, I make a profit here. Yeah, so those are the profit level. You see, so that's why moving average, the moving average, it can be used as a support point when the stock is moving on an uptrend. Oppositely, when the stock is moving on a downtrend, moving average line is the resistance. Only until it break above. So over here, this is a very complicated level. So unless there is a clear trend line, you look at it, because if you look at the stock over this period, you can't really identify a trend here. Okay, only until it show a trend, then you start to use moving average as your support and resistance. Over here is quite complicated because you can't really spot a trend at this point in time. It's sort of about forming a rebound, sort of forming a base here, then it start rebounding. But you need to wait for a clear signal that if it again form another higher low and higher high, then this moving average can be used as a support for your stock. Okay, so this is how we actually use moving average to find your support and resistance. And just like I mentioned about Fibonacci, how do we use Fibonacci and where to find Fibonacci? So Fibonacci is over here. You just click Fibonacci retracement. How to use Fibonacci, it depends on it actually depends on the horizon, the time frame that you're looking at. So if I'm looking at the time frame from 2020 to now, right, then it's actually on an uptrend. When the stock is actually on an uptrend, I draw from low to the top. Okay, the lowest point I draw and all the way drag to the highest point. So where is the support level? This is a support level, and then this is a support level, and also known as previous support is your current resistance. So you'll be able to know that this stock, when it hit this level, it start rebound, then it drop again, hit, rebounded again, hit, break below, but it start rebounded again. I think just few days when it break below, it rebounded again. So Fibonacci retracement, all these points is also a support point. These are the mathematically support level that Fibonacci have identified for you. The 50% level, the 61% level, 78% level. So when a stock break below the 50%, right, it means that the trend is very, very weak. So it's very important for us to monitor Inari, right? the trend since 2020, if it break below this 50% level, it means that the trend is going to be very, very weak. But if it can stand here and start rebound from here, it means that probably we are going to see another spring for Inari for the tech counters. Yeah. So this is how we actually draw Fibonacci retracement. But let's say if you are saying that, oh, I don't want to draw since 2020, I want to draw since early 2022 or late 2021 to now. You can draw the same thing. So you just, if it's looking at end of 2021 until now, right, it's actually on a downtrend. So if it's on a downtrend, then you draw from top to bottom, this level. So this is where you will start to identify the resistance level of the stock. So this is the first resistance, then 50 point is another resistance. Yeah. When this stock rebounded above this 50-point level, right, you can expect the rebound to be very strong. Yeah. So this is thing that you need to bear in mind. This $3 and $3.30 level, $3 to $3.30 level, right? This is a very critical point. If the stock rebounded above this point, it could mean that the stock is very strong in terms of the next cycle of rebound. Yeah. So this is the other two ways of how to identify support and resistance. Yeah, using the moving average and also using Fibonacci retracement. So I think with that, I probably come to the end of today's sharing. Feel free to ask your questions. If you have any questions want to ask, right, put it in the Q&A box. I think later on the moderator Charles will actually be picking up questions, and we'll try our best to answer all the questions that you guys have.
All right, thank you so much, Mr. Jerry Lee.
Yeah.
So let me share my screen. So we will begin our Q&A session in a bit. So if you have any question to Mr. Jerry, you can type your questions in full a sentence in Q&A box. I will read your question in a bit. Okay, for first question, how to adjust a trailing stop? You are mute, Mr. Jerry.
Yeah, can you hear me?
Yep, can.
Okay. Yeah, I think for trading stock, right? For local stock exchange, I think there is no auto setting for trading stock. Then you will actually need to adjust yourself whenever the share price move. So you need to set, I think that one actually depending on where you want to set the percentage of your cut loss. There's something very important. I think like I mentioned just now, right? You need to set a level that you want to cut loss first. Then when the share price moves higher, you actually need to move your cut loss point higher also. So that one is depending on the percentage that you set. But for a lot of the international brokers, right, they actually will have the trading stop loss function. So it's actually built in for you to put your trailing. You can actually set it as either you want to have a hard cut loss point, stop loss point, or you want to have a trading stop loss point. So for international brokers, I think the benefit is that they allow you to set your trailing, the built-in trading stop loss point. But for most of the local one, right, you probably will have to calculate yourself and look at the percentage that you want to stop for the losses.
Okay, since you have a 4 method, which one is the most reliable?
For myself, I used to be using the first one is a trend line. Is that one definitely something very important, because why do I say so is because like I mentioned at the first, trend is your friend. And when it comes to using technical analysis, right, you know the trend of the stock. So I will actually be combining trend line and also moving average. So this is the two things that I've been combining and look at how to identify the support and resistance for my stock. So I would actually suggest not to just use either one. You need to, for myself, I actually use a combination of trend line and also the moving average.
Okay, we have around 4 questions from Shamim Haris. For first question from him, for the uptrend, you say you buy on the pullback, is it right? So, but how about a theory buy on breakout?
Yeah, I think that one is it's really depending on I'm not a fan of buying on okay, it depends on the breakout point that you're looking at. So can I share back my screen?
Can, sure.
Yeah, let me share back. And it's better to explain using chart.
Yeah.
Yeah. Let me share back the slide just now. Okay. So just now I mentioned about, okay, let's say, let's use this example, right? If I use this example, if I buy at the breakout, this breakout is actually a good buy, right? This is a good buy of a breakout, okay? But if I'm buying another stock, for example, if you look at this stock itself, just look at this period. Just look at this period. I won't be buying at all this point. I won't be buying at all this point. Whenever it hit a historical high point, I will be buying whenever there is a pullback. I will be buying whenever there's a pullback. Or let me share my Inari. I think let me share this. Right. Okay. If you look at clear all my indicators first. Okay. If you look at Inari itself, right? I won't be buying this stock when, okay, for example, I won't be buying the stock, right, at this point. I won't be buying the stock at this point. If you can see my screen, right, Shaz?
Can.
Yeah, so I won't be buying the stock at this point. Although there's a breakout here, if there's a breakout here, I will buy at the breakout, okay? If I miss this breakout, I won't buy at this point. This is what I means don't buy at the high. If I want to buy, I will actually wait the stock to pull back first. I wait the stock to pull back further, then this is my entry point. Yeah. So this is what I mean by buying at the pullback for an uptrend stock. Don't buy at the high point. Breakout point is a good buying point, but not at the high point. If you miss the breakout point, because usually if you're not a trader, if you don't monitor the market very closely, right? Usually, let me tell you, usually you will miss out the breakout point one because you look at the stock at the end of the day. And at the end of the day, it already break out and you break out for 10% already. Then you miss out a 10% breakout point and you buy at the point, the risk is very high. So unless you can monitor the markets and you can on the intraday basis, right? At the breakout point, you buy at it, then there's a good buying point. But if you miss out the breakout point, don't chase high, wait for retrace. Yeah.
Okay, for second question from Shamim Haris, how to avoid bull or bear trap?
Okay. So just like I mentioned, right? The way to avoid bull and bear trap is actually to set a percentage below or above the support and resistance. For example, if you say support, right? Let me say this one. Let me take this Inari as an example also. Okay. Let's say towards this line. Okay. Let's use this point as an example, right? So we always say, oh, this moving average is a very good support and resistance, right? So let's say over here, it break below. Is it a sell to me? So it depends on what is your tolerance level. What is your tolerance level? Just that I mentioned about that. When your support, for example, if you set your support at this level, you set your support at 3.1, okay? 3.1 is your support. But should I sell exactly when the price drop below 3.1? No, the answer is actually no. You don't sell immediately when it break below. You need to have another tolerance level. That one is actually based on your risk and also based on your capital. If you have a very huge capital, you can actually set your tolerance level at 10%. I can actually bear with the 10% of a drop. Once it drop below the support and drop further, 10% further, that's where I will actually cut loss. So that's how you actually avoid this kind of a bear trap. So for example, this is actually a very good example of a bear trap. When it dropped below, it just dropped below here for a couple of days, then it start rebounded and move higher. Then it start rebounded and move higher. Yeah. So if you sell here and you don't buy back, you miss the rally from about $3 all the way to $4, or about 30+%. So this is exactly what I mean by bull trap, bear trap. So in order to avoid bear and bull trap, what you need to do is to actually set a percentage above your resistance or a percentage below your support. Yeah, to make sure that you don't miss out on it. Shaz, you are muted.
Dynamic S or R, structure S or R, trend line S or R. How significant are these three? Can we combine it three so it can be confluent?
Dynamic support resistance, structured support resistance, and the trend line support resistance. I think you actually need to combine. Like I mentioned just now, no matter it's a dynamic structure or trend line, you actually need to combine everything. For example, the SNR, the support resistance that you set for yourself using, for example, using moving average, or the one that you use using trend line. You need to combine everything to look at it as a whole. Technical analysis is not about just looking at one indicators and to decide whether I want to buy and sell. Yeah. So it's better for you to combine those indicators together and look into it.
Okay, for next question, if you use FIBO as a support or resistance, in what time frame and how long the timeline is most suitable?
I would suggest to look at a time frame of more than 3 to 6 months. Yeah, because without a proper 3-6 month period, right, you won't be able to really identify a trend in a company, in a stock. Probably it's just a minor trend. And if it's a minor trend, right, it's very, very easy for you to break out. The longer the period, the better the result of FIBO SR. Yeah.
Okay, next question. What angle should I draw the trend line?
There's no specific angle numbers, but don't draw a very steep trend line. A very steep trend line will not have a very good result. Yeah, let me see if I have some chart to show. Yeah, so for example, right, you see this kind of chart. How to draw the support. If you want to draw this kind of a steep chart, right? For example, I want to connect the point over here, or even to connect it here. So those are very steep kind of if the rate is very steep, right? Usually the pullback will be very significant as well. So those kind of a chart, if you want to draw a trend line, is very, very difficult. So I would actually prefer to draw a trend line that is flatter. I mentioned just now, a flatter trend line, it will actually be much stronger than a steeper trend line. But there's no specific figure.
Okay, can you please show again in our chart which EMA 25 or EMA 50? You mentioned if the price touch and then only good entry point. So are you looking at the EMA 50 or EMA 25 and EMA 50?
Okay, it can be a combination of both in a chart, right? For me, as long as the price, okay, how do I execute this, right? How do I execute it? Let's say today I have if my trading capital, let's say my trading capital is 10,000 to trade in a RE. Okay, so I buy at the pullback, right? Buy at the pullback, I will buy 50% of my capital when it touch 25. Okay, when it drop touches 50, I will buy another 50%. But if it break below this 50 and hit certain percentage, then I will cut loss. So that's my trading plan. And you will see, right, in this kind of trading plan, your losses is actually quite minimal. You won't suffer significant losses because on the uptrend stock, if it's on a steady uptrend stock, the price gap between the 50 and 25, it won't be too significant unless there's a sudden spike. If there's no sudden spike, right, you look at the price between 25 and the MA between 25 and 50, right, it won't be a too significant gap. So that's why it will be my first entry point. 50 is my second entry point. And if it continue to break below, then that's my cut loss point.
Okay, for next question, Could you please share the Inari selling point using the resistance point?
Inari selling point using the resistance point. So if you want to use you want to use the moving average as a resistance point, you need to look at the downtrend period. Okay, so downtrend period, this is where you can identify your resistance point. So those are the selling point, selling point, selling point, selling point. Yeah.
Okay, next question. What is your suggesting time to entry using a moving average?
So I can't get the question. What is
suggesting time to entry using a moving average?
What is my suggesting time?
Yeah.
I can't really get the questions. What?
Yeah. I think for time, I guess the time frame lah.
Time frame.
Yeah.
Time frame as in suggesting of entry a market. I can't really get the where the audience is coming from.
Okay, it's okay. We move on to next question. In Inari, there are few bear trap. How to avoid it?
Yeah, the bear trap I mentioned, you need to set certain percentage is one thing. Second is, let's say over here, you set 5%, but it dropped below 10% already. So you exited, okay? When it exited, you also need to monitor the stock. So for stock that I'm trading, right, I don't just cut loss and leave it away. You know, for stock that I have cut loss, I will still monitor it. And when the price start to, if you look at it, the price start to went sideline, consolidate over here, and if it start moving back above this moving average, that's where I will start to monitor back the stock. And whenever it hit back this support resistance, right, this is where I start buying back. Yeah, so those are things to monitor. Don't just sell and leave it away. Sometimes you need to acknowledge the fact that you won't be able to make 100% of the money in the stock market. You will be losing out, you will be missing out here and there. But the most important thing is we need to ride through the whole trend. Yeah.
Okay. Next question. We move on to the next question. Is it possible for us to do a position sizing with small capital?
Your cost of capital will be very high. The cost of trading will be very high. Yeah. I don't suggest.
You don't suggest. Okay.
Yeah.
All right. Next question from ST Lee. So is dividend, should be adjusted or unadjusted in the chart?
Should be adjusted.
To be
Everything
adjusted.
should be adjusted. Yeah.
All right. Okay. Next question from Eng Seng Hock. So this morning up are 32 cents. So and the closing of the day down around 30 cents. What trend is this?
Oh, you can't decide or you can't tell a trend of a stock based on the daily movement. Trend of a stock is, I mentioned just now, right? You have to look at it over months, at least it got to be weeks, 2 to 3 weeks kind of a frame, tell you whether it's moving up or down. Yeah, on a daily basis, you won't be able to tell. Like for example, on this stock, I need to take 6 months to tell you. It takes 5, 6 months to tell you it's moving down. So you need to be able to combine a few things to look at to identify the trend of the stock. Yeah.
Okay, next question. If I'm not mistaken, from ST also, Jerry shared the volume. It is important in technical analysis. May I know how the volume play its role in both support and resistance and also Fibo?
It's very important. Let's see. Let imagine one thing. Today, okay, why I say volume is something very important. Let me give you a very layman example. Okay, we don't talk about stock market first. We talk about let's talk about property. Okay, yeah. Today, let's say if you are buying a property in PJ area, okay, PJ area property. I don't know the price, but let's talk about 500,000 of a condominium in PJ area. Okay, a normal condominium in PJ area usually be selling at 500,000. Today, there is this fella, his wife really liked this condo and he really likes this unit 88. He paid 2 million to buy from this owner. So let's imagine today, if it's that just one transaction for condominium that transacted at 2 million, does it mean that all the condominium in PJ area have to be worth 2 million? I think the answer is very clear. It's no, because there's just this fella that wanted to buy at 2 million, but the normal price is still 500,000. So this example tell you how important volume is. Because if everyone is buying the condominium at 2 million, then I can agree with you that the price of this condominium in PJ area is 2 million. But if there's just one crazy fella that buy it at 2 million, it doesn't show that it's justified for me to pay 2 million to buy this condominium. So this is how important that volume is when we actually apply it into the stock market. But when we talk about stock, right, people can't usually get it. But when we apply it to a normal layman example, they will be able to get it. So I hope with this example, you'll be able to get why volume is so important when it comes to analyzing chart.
Okay, next question from Janet Kaur. Hang Yuan made a sharp up and down yesterday. So what to do? Is it sell or take profit?
No, we can't buy sell call. Yeah, I mean, definitely there is and today volume is not healthy. With today's volume and today's movement, it's not healthy. What I can say is with today volume and the movement is really not healthy. Yeah. So just need to monitor.
Okay, next question. In trading, do we have a target price when we take a profit, or we ride all the way until reversal?
I don't usually set a target price. Whenever I buy a stock, right, I will buy when the trend change. Like I think that our audience mentioned just now, there's a reversal. I will buy when the trend, I will sell when the trend change, or I will sell whenever it hit the resistance point. So I don't really preset a profit taking level. Yeah.
Okay, next question. Okay, this question is from Mr. Ilman Bahruddin. So hello, Mr. Jerry. Maybe my question is a bit deviated from the topic. So is it important to subscribe to the real-time chart, or is sufficient enough to use a lagging chart?
It depends on your trading pattern. If you are intraday traders, then it's important for you to use a real-time chart. But if you are saying that you are not really trading, you are really investing for 3 months, 6 months kind of a period, on and off, you look at technical chart, then no, you don't need to use you need to pay for a real-time chart. There's a lot of providers out there that you can refer to. So it is really depending on your trading style.
Okay, next question. Just now, Mr. Jerry, you mentioned about buying above the support line. At what point will you buy? And what percentage or above? Is it percentage or above the next green candle?
I think as long as right the price drop and touches the support line, and the next day if it turn green, I think I will actually start buying on that point. Then my cut loss will be the lowest point of the previous day.
Okay, thank you so much. So we move on to the other questions. So can we use support and resistance for intraday trading?
Can. I mean, on regardless of what frequency, you will have your own support and resistance level. So you are trading daily, you are trading minutes chart, you will have the support and resistance. It's just that if you are using minute chart, your support and resistance will be weak because it actually moves very fast. But if you are using a daily chart or weekly chart, your support and resistance will be much stronger, much solid.
Okay, I think we already finished all the questions for today. So we already almost at the end of our webinar. So let me share my slide again. Okay. I would like to introduce you guys with the Bursa Academy platform. Bursa Academy is a platform where it provides investor or trader with a continuous and also holistic learning journey where you can get all your reading materials in the Bursa Academy website. So what you can do is simple. You want to learn, you just go to their website, which is www.bursaacademy.bursamarketplace.com, or you can scan QR code over there. All right, next. Okay, next webinar will be a teknik membeli saham berdasarkan carta, which is this Friday, same time, 8:30 p.m. and 10 p.m. I will put the registration link in the chat box so you can register now. All right. So for those who would like to ask more questions to Mr. Jerry, you can email him where it is appear in the our page in the slide. So thank you so much, Mr. Jerry, and also thank you so much to all our participants today for joining our webinar today. So, and also I would like to say once again that thank you to Bursa Malaysia for conducting this webinar. All right, good night, everyone.
Thank you, Shah.